Hi, I'm Bronson Hill, and I am so excited that you are here for this interview with Tim Hubbard, who has one of the most unique business models that I've heard of. He works with short-term Airbnb rentals, but not just single-family houses. He works with small multifamilies, typically 8 units, 10 units, something like that, and he's been able to 5x or more the revenue on each individual unit, which is really phenomenal. So many of us are trying to become passive investors and do more things passively. Sometimes you have to be willing to do some things active to actually become passive. And so he actually lives in Colombia, and he's got 30 units that are in California, Kansas City, and Memphis. And he's just done a phenomenal job of building team, building individuals around him to help him to do his business. So going to just go over his bio real quick, that he started as an investment broker, and basically he has traveled now over to 70 countries. He lives really the nomadic lifestyle, which is amazing. And he's a CEO of Midtown Stays, which is a short-term rental accommodation company, and has accommodated over 15,000 guests with excellent reviews from all over the world. And you're going to get in here a story, but I think it's going to be really compelling, and I think you're really going to like it. So we'll jump right into it here with the interview with Tim Hubbard. All right, Tim, welcome. Welcome to the show. How you doing today?
I'm doing fantastic. Great to be here, Bronson. Nice to see you again.
Nice to see you again. We just saw each other recently in Belize at the Real Estate Guys Summit. And I just, that was one of the best events, and has been one of the best events I've ever been to. How many times have you been on that event, by the way?
That was number 6. Yeah, it is one of my favorites for sure.
Yeah, it was amazing. We had guys like George Gammon and Robert Kiyosaki and a whole crew of people there just to learn from. So really valuable. So awesome. Well, we're going to jump into it here and just talk about your business and what it is you do. And you have a really unique business. Can you just tell folks a little bit about your journey and kind of how you got where you are today? And you just have such an interesting story from just on so many levels. So can you just give people an idea of who you are?
Yeah, sure. So I'm from Northern California originally. I've been invested in real estate for over a decade. Used to work as a commercial broker with multifamily properties. And so that was kind of my natural progression. I started acquiring small multifamily properties. But the whole reason I was in real estate was to travel, essentially. So I've been staying in lots of short-term rentals, hundreds really across the world. And I realized 6 years ago or so that a lot of these properties I was acquiring could make way more revenue as short-term rentals. So I started converting a lot of them. And it's kind of where I am now. I focus on finding properties that work well as short-term rentals that I can convert over from long-term.
Awesome. Yeah, no, we've known each other for a few years. I think I first heard you on a podcast, and I was so taken by the model that you have come up with, because I hadn't really heard anybody else doing it. So can you maybe talk a little bit about, I know you had some short-term rentals in Northern California, and then you expanded out. Can you kind of maybe talk about a little bit what you were doing there, and then what you started doing in Memphis?
Yeah, so I had properties, or I still have properties in Sacramento where I'm from, and still operate them as short-term rentals. But I was kind of looking for other markets where the numbers made a little more sense. Prices got pretty high up there. So I went around the US, several markets, and landed in Memphis a while ago. I was actually staying in a short-term rental, looking for long-term investments, ironically. And then I ran the numbers on the place I was staying in. And I'm like, oh my gosh, this place is crushing it, based on the sales price and the amount I was making. So kind of, expanded into Memphis. And then also expanded into Oklahoma City since then. So the model really works in lots and lots of different places. And my kind of whole foundation is just I find properties that work as long-term rentals, and then I convert them over. So
Right. And I think a thing that's really interesting, a lot of people think of Airbnb or short-term rentals. They think, oh, this has got to be a vacation rental or a single family. But you found a way to do this as a multifamily. And I know just some of the high-level information that, you took this 8-unit, your first one, which is an 8-unit complex, and you were getting, the average rents were like $450 a month. And through short-term rentals, you were able to take those up to $2,500 a month in gross rents. Which is phenomenal. So you basically over 5x the returns, which you think of any business model, that is absolutely exponential growth. I mean, that's like unbelievable. So can you talk just a little bit about that story, about how you did that? And, again, a lot of our listeners some are more passive, some have some homes, and just, kind of what it takes to like what it took for you to kind of do that process, and even how you got that idea to like, okay, I'm actually gonna do this short term, and logistically what it took to do that.
Yeah. Well, the nice thing about getting, these multifamily properties that start as long-term rentals is that you have way more financing options, right? So the property was cash flowing as a normal long-term rental. So it made the financing easier. I just went into it with the plan of swapping them over. Yeah, that 8 unit property, uh, it needed a lot of work. It definitely needed a lot of work. So I did a big renovation on it, kind of made all the units unique, and it really worked out. And actually, I was staying when I was doing research in the market. I stayed in an Airbnb on that same street, and I ended up talking to the owner, who had been running hers for like over 10 years, like before Airbnb. And she had a small multifamily property. And I told her, I'm like, hey, I'm in contract for this property down the street. I'm planning on doing the same thing you're doing, essentially. And it was really good. We're still good friends. And yeah, it's, people are living differently than they used to. I mean, especially now, everyone can work remotely. So short-term rentals can work all across the board, not just as a vacation rental, but people are moving to new cities and staying longer. So that was kind of the epiphany, I guess, in the beginning.
Yeah, absolutely. And I know you, yeah, so I think you'd mentioned a little bit, I love the numbers on this though too. You bought this place for, I feel like I know some of the numbers just because I was so compelled by it, but it was like a couple hundred K for this 8 unit place. You bought it, you decided to convert these over, you put 50K into furnishings, another 50K into like, renovations, and you had to kind of, kick in a nice way, kick the tenants out and say, hey, we're going
Yeah.
to convert this. So you convert it, and then you've got these Airbnb, rentals. And so you were doing this. And so you went, obviously the cash flow is so high. And so I think for a lot of people listening, they'd say, I want to create something that really creates a lot of value and take, hey, instead of just getting one house that produces a few $100s a month, to be getting thousands or tens of thousands of dollars a month in gross cash flow. And so you did that. Now, what did you find? I know I don't know if you said this just now, but we've talked about this about, California, where I live in California, where you lived. And I know you don't live in California primarily, but some of the jurisdiction, being in a place where you can do what you want with your property, why that was a big factor. And then also, can you just touch base on kind of how you scale this up? Because you don't even live in the country, right? You actually are a remote investor. A lot of people would look at your life and admire and say, how would you've been to over 70 countries, you live in Colombia, and you're doing this all remotely, which is just fascinating. So can you talk maybe about that process of how you scaled it up to basically, instead of working in your business, you started working on your business and creating these systems that allowed you to live the lifestyle that you want, which I think it really is what we all want. We all want a passive, or something that's more passive, that we can work where we want, live where we want to, and just invest where the numbers make sense.
Yeah. Yeah. No, some good questions there. I think the first one is, when I was out there looking for these traditional single family rentals, that are maybe making $200-300 a month, I'm like, man, I've got to buy like 100 of these things, you know what I mean? To kind of be where I want to be. And then it's like, shoot, after running the numbers and the cash flow is just out of control, it takes far less properties. So that's what I really liked about short-term rentals. And that's why I got into it. But I didn't get into short-term rentals to be doing the day in and day out of all that, you know what I mean? So that was just a progression, figuring that out. That's why I got into real estate, so I could get passive income. So I didn't want to get real estate that wasn't passive. So since the beginning, I guess I was always looking for systems and people. People's like the most important piece, people to help me manage all these things, so that I'm not the one communicating with guests. I'm not the one doing the housekeeping, doing any of these things. So I guess very early on, I was using a lot of those tools and looking for people to help me with this. And now it's just gotten way easier because there's so many software programs available and so many automation tools. So it's only gotten easier, I guess. And I guess the demand for short-term rentals and the visibility, a lot of people are still discovering Airbnb and short-term rentals. So as that continues to grow, we just get more and more options for management and the whole, every bit of the process.
Yeah, no, I think you said something really interesting that a lot of people wonder, I want to become financially free. And so, you start buying these houses, and that's what I did too. Started buying single family houses. Sounds like you did as well. And then the cash flow just really isn't there. I mean, even if you get a great house, it might produce a few $100 in cash flow, but it's not kind of where you want it to be. But this
Right.
really gears it up to be much, much more high cash flow. And then it allows you in a way to be able to scale. So I think their one model is people like our investors invest passively in our multifamily deals. There's another model that you basically do some work to kind of set things up and kind of go in and create this project. And then you find a way to kind of manage it. And I know you've had some help, like you said, with team. I think you've got a couple full-time people that work with you now. And how many units do you have now that are doing this Airbnb model?
I have 30 short-term rentals that I own in my portfolio, and then I have another 10 actually that we just added recently on like a lease arbitrage model, which is not actually owning the property, but still generates a lot of cash flow. And I already have the team in place, so it's kind of like an easy thing to add, So
Right. So a couple questions with that. So you said lease arbitrage model. So can you explain kind of what that is? Is that where you go to owners and you say, "Hey, I'll rent this for a certain amount," and then you basically do the short-term leasing with it? Is that what it is? And how is that when you've approached owners? Like, have they been open to that or resistant to that?
So I was never, I'm like an investor, at heart, and so I was never really excited about the lease arbitrage model because you don't build a lot of wealth, right? You're not owning the property. So I haven't really sought those out. I actually had someone come to me, which was great, and he was building a new restaurant uh, and renovating an old building. It used to be a cool hotel. So he had 10 brand new apartments essentially upstairs above the restaurant. He said, "Hey, do you want to lease these? I don't want to deal with tenants." And he wanted guests coming into the restaurant. So it just worked out really well for us. It was just one owner that I'm working with, and really cool, unique properties. And so that was kind of a good deal for both of us. But it does make sense, if someone is seeking this out. And yes, it's basically you lease an apartment and then you rent it out, sublease it as a short-term rental. Of course, you're going to need permission on your lease to be able to sublease, but then you make the difference. So a lot like these ones, for example, we negotiated $1,200 a unit, and they're renting for like $3,500 a unit. A lot of these, so
Wow.
like it's an easy way to grow some cash. But then at the end of the day, yeah, you don't have the actual investment. So there's good positives to it
Yeah.
for sure.
So, question on that, like, would you say in general, like setting this up? I mean, it sounds like you have quite a team that helps you do this versus if I'm a wealthy, professional and I go have two or three houses and I do it, or I have my spouse go in and do it, or I have a maid that goes in and like, how have you set up kind of teams to be able to take care of this stuff for you? Like, for example, in Memphis, or I know you have some stuff in Kansas City. Like, do you have full-time people that do this? Do you have like people on speed dial? Like, how does that work as far as, I mean, do you have to manage all that? Like, how does all that work?
Yeah, it's kind of a combination. So I think it also depends on how many properties you have in a specific area. If you only have one or two, then obviously it's going to be challenging. You can't hire someone full time that's only working on your properties. You know what I mean? It's just going to be too expensive. So kind of as you scale and you get more properties, you have more options. But I would say, a couple of the easy ways in is that you have a housekeeper, right? That's a big component of a short-term rental. A lot of times you can empower your housekeeper to handle guest messages, give them access to your communication channels. So a lot of times you could just pay them additional on top of the housekeeping, and they can help you out a lot with that. If you didn't want to deal with any of that, then there are lots of new management companies popping up. I mean, more and more and more, where you could just pay someone to do all of it. And then kind of like a side option to that would be what they call co-hosting. And that's where this kind of started with Airbnb, but someone is a co-host for your property. So they have full access to your property. And a lot of them, they already have their housekeeping set up in the city. They already have their maintenance contacts. They want to manage more properties. That's kind of their thing. So they're a good option. And then if you have enough properties, yeah, then you can justify hiring your own team. So in Memphis, yeah, I have quite a few people that work for me full time. And then all of our reception. I have a full-time team, mainly in the Philippines, that handles all of our guest reception and all that. So kind of combination. It depends on where you're at, how many properties you have, et cetera.
Yeah, no, I admire how you've done it, because I think a lot of people, myself included, are saying, okay, how can I become more passive in my investing? But in order to do that, sometimes it requires a level of active work. I mean, it said no investment is really truly passive, because nobody cares about your investment like you do. But once you learn the asset, once you learn how it works, and you can potentially set something up that creates this huge passive stream for you, that you're getting paid really, really well. And it's amazing that 1.8 unit, if you look at the gross revenue, I mean, that made you gross revenue similar to a much larger play, or gross profits much larger similar to a much larger building, maybe even like a 100-unit building, because it's just, there's so much profit there. There's so much that you're seeing that's very positive on that. So are there ways, I mean, I'm just curious in general, in this world, are there folks that do like if somebody wanted to passively invest in something like this, are there ways to do that? Either, you guys do that, or the other groups, that they take passive investors to do this type of thing?
Yeah, good question. I'm not personally doing that right now, but it is more and more common, and there are lots of ways. Like here in Colombia, for example, meeting with a friend of mine, we're looking at a building on Wednesday that already has all the architectural plans and everything. I'll have a short-term permit license for the whole building. And so that's a big project, 14 stories or something, where that would be like prime for a syndication type deal, where someone says, hey, these returns are much higher. You already have the regulations, it's permitted, it's in a good area. So there's lots of things like that popping up, I think. And that's a good way for someone to get into it passively. Yeah. So I think it's
Right.
going to be more and more common.
Right. And so for you, are there ways that, I know with we do a lot of long-term multifamily syndication, and so there's some tax benefits through cost segregation. Do you get some of those same benefits with what you're doing, or are you treated mostly as short-term? I mean, because it's very high cash flow. So then I wonder, like, how do you shelter some of that income, because you maybe don't have the write-offs that you obviously have staff, so you can write off some there, but you're still getting, even when it's all said and done, it's probably more similar to flipping in a way, because it's such high cash flow, except you own the asset. But are there ways that you have found that you can lower taxes with an investment like this?
Well, you get all the same tax benefits as you would a normal real estate investment. So, bonus depreciation, which has been awesome. Of course, you get, the first year or two, you've got higher expenses because you buy all your furniture and all that, which you can depreciate depending on the cost, or you can expense it in the first year. And I actually was just talking with my CPA. She's, she just focuses with real estate clients, and you can become a real estate professional actually easier operating short-term rentals than you can traditional long-term rentals. The hour requirement is lower. It's 500 hours instead of 750.
Oh, interesting.
So for someone, there's some caveats to that. I'm not a tax professional. You want to make sure you talk with someone, but you can kind of get that status a little easier. So if someone is investing passively or something like that, and they're, a doctor on the side, or they have the W-2 income, they can use some of those losses on that side, which is really cool. But yeah, you have all the same tax benefits that you would with traditional real estate.
Yeah, that's interesting. You mentioned the real estate professional designation. A lot of people have never heard of this, and I something I talk about quite a bit, because I think it's really compelling. There's a way that that our professionals can sometimes get their taxes to zero, and it's something I was able to do the last couple of years working a corporate job, of just basically keeping track of my hours, and I was doing 51% of my hours, or over 751 hours a year, in real estate, and then I was able to take these big passive losses through multifamily, other types of real estate, and be able to take them all up front to defer or write off some of those taxes. Now, we're not obviously getting anybody any specific tax advice, but there are some CPAs and things that deal specifically with real estate professionals. It could be for an individual, or it could be for their spouse, and so it is very compelling. And when you're in it, it does make you really appreciate real estate in general, as well as truly passive income. And you kind of touched on it too. And what I realized is that if I was a real estate professional and I made, 150K a year in real estate, but yet it would be similar to like making 200 or 225 or whatever without being a real estate professional because of the tax savings. And so a lot of people don't realize that by having passive or other sorts of income, it actually is not equal to other income. And then of course, assets appreciate as well. And so instead of having to go chase the money as a physician or as a business owner, you actually have this residual that kind of helps, give back to you in that way. So let's talk a little bit about some of the regulations around this. I know in California, in certain places, it can be like cities or neighborhoods are like, oh, you can't do any more Airbnb. And it feels that there's some volatility there, at least in certain areas. Are you finding that's just in certain states and areas, or is it staying in red states that's better, or what? Can you maybe talk a little bit about the regulations there?
Yeah, I mean, there's certainly some states that are more open to it than others. I tend to find that the states that are more open and more landlord friendly, just in general for real estate, are also probably they're more likely to be more friendly towards short-term rentals as well. So not, every neighborhood. The thing with regulations in the short-term rental space is that it can literally change neighborhood by neighborhood. So we have some states, for example, like Texas and Arizona and Tennessee, which have come out statewide and said, hey, you can't ban short-term rentals. You can't do it. But it doesn't mean that a city can't regulate them. So there's certain states are definitely like on the forefront. They're more open to it, but it's going to come down to cities and neighborhoods. But it's really easy to check now. Basically, you can just Google or Airbnb has a lot of that information on, that they have on their website too. But I think, to me, it's like, it's kind of like the Uber versus taxi situation. You know what I mean? Like people love Uber, right? And that's the reason it's grown so much, but there was a ton of pushback in the beginning, the taxis and in some places there's still a lot of pushback. So I think it's going to be similar in the short-term rental space. Places with higher housing shortages like San Francisco and New York, those places typically have had the highest or the hardest regulations, but they also have more hotels. So they're getting more pushback from that too. So yeah, definitely some places are easier than others, I would say.
Yeah, my mom lives in Seattle. I grew up in Seattle, and she has a place that she was trying to rent out short term, and I think the city of Seattle recently passed it was like a 40% tax on Airbnb. So basically on what they pay. So if you charge it, it's $200 a night for the place, then $80 would go to the city,
Oh my
which is
gosh.
kind of crazy. So a lot of these West Coast,
Really
it's
crazy.
funny. I live on the West Coast, but I don't own anything on the West Coast. We have 100 million in real estate. It's all, the Sun Belt for those reasons. But so let's shift gears here a little bit. And again, this is Mailbox Money is all about passive investing. And, just for you as a person, as a friend, I just have a lot of admiration for you, the things that you've accomplished. But are you a passive investor, or what sort of things outside of this particular focus do you invest in, or are you interested in?
Yeah, so I have a broader real estate portfolio outside of short-term rentals. So I have long-term rentals also, some commercial property. Um, and yeah, I try to I try to operate everything pretty much as passively as possible. I do live thousands of miles away, so I'm not in the day-to-day operations. And I have been investing, outside of the country too. So in Brazil now, and also here in Colombia in property. So that's kind of like a hedge for me against the dollar. But I'm in the gold, precious metal space as well, and some cryptocurrency, and just trying to kind of stay diversified. And I guess anything I go into, I go into it with the idea of trying to set it up passively. So a lot of that's just been real estate.
Yeah, no, that's great. I think it's, and we talk a lot about this too, about metals being a hedge against inflation with all the money printing that's happening. Whenever inflation does pick up, or we're already kind of seeing it, at least at the time of this recording. But yeah, it seems like like you said, you're doing some passive things, you're actively involved, but it is really exceptional that you've been able to create the life that you want and be able to live in another country and have all this going. So how many trips do you make back to the US per year for your business? Do you come back a few times a year, or are you mostly pretty much all remote?
I mean, It depends, if I'm acquiring new properties and the types of properties they are, but I don't really need to go back there, unless something, I don't know. I I haven't really needed to go back too much. My team's awesome in the U.S. They're really, really great. And so they will help us find new people if we need new people. So that's not me kind of doing that part either. I usually, like on Tuesdays, Mondays and Tuesdays, I do reviews with everyone, just short 10, 15 minutes and not all the time. But no, I wouldn't say I spend too much time in the States.
Yeah, no, that's great. It's wonderful you've been able to do that. One other question on you personally. I know you are also into personal development. Do you have any personal development stuff that you enjoy, whether it's a book or it's a course or a program or some stuff that you can just, people that I feel like I love the intersection of, real estate and investing as well as some of the personal development stuff. But do you have anything that you could recommend?
Yeah, like you mean like favorite books and stuff?
Sure. Yeah.
Yeah, I mean, I love learning. I feel like if I'm not learning something every day, I'm just wasting away. So I listen to lots of podcasts. I think YouTube's fantastic now. We can really tailor our interests. Favorite books, I think a really big one for me, one of the most influential. I'll give you a few. The Slight Edge was a really big one for me. By Jeff Olson.
Yeah, it's an excellent book. Yeah.
Excellent book. So I try to reread that, like once a year. And for a while I got into the positive psychology books too, like the Happiness Advantage was a really good one. And so I try to journal and, journal about things I'm grateful for in the beginning of the day, just to start things off right. So yeah, good books. And I just love traveling too. I think it really opens our eyes to the world, that like every place is different. People are different everywhere. Like, cultures just have so much to teach us. So I guess, yeah, all those things.
That's awesome. No, I appreciate that. I think, we're here to grow. And I think that's why, we listen to podcasts and we read books and we're constantly learning, because it's not just about making money. It's about a better quality of life. And there's different ways to that. And the Slight Edge, the principle of that is that you do certain habits and certain things every day, and it has an exponential effect over time, whether that's bad habits, such as, smoking, or, eating, I don't know, terrible food and watching 4 hours of TV a day. Like each one has, versus I went for a run earlier today, like that has a very positive effect long-term over time. So I think that's really great. Well, appreciate you bringing your Slight Edge to the show here today. Well, I wanted to ask you about I know you do some training. Maybe you can talk about your event and just any training you do or how people can get a hold of you, Tim.
Yeah. So I guess a couple of years ago, started getting a lot of questions. People like, oh, how do you manage these short-term rentals that are so much work? They don't have to be so much work. I mean, that's part of the stuff that I'm teaching, is that we can set them up passively. So I started a podcast a couple of years ago. Also, it's called Short-Term Rental Riches, and it's on, iTunes and all that. And then started teaching, did a couple live events, and we got the next one coming up on July 30th, just a few weeks. So I'll be flying back to Memphis and meet a group of people there, and we'll be in a hotel for the weekend, but I've rented a tour bus. We're going to go around and visit some of my properties, like in action. So it's kind of my, weekend event to really open someone's eyes to the short-term rental world space, and how and where we can find these properties and how we can set them up so they can still be passive. And so that'll be a lot of fun. And that website or that company is called Rest Methods. So restmethods.com is where we've got info on that. And someone can get a hold of me through there as well.
Okay. Awesome. Well, Tim, I want to honor you. You're somebody that I highly respect based on your, the way you've grown your business. You've been very creative. You found really a genre that I didn't even know was there. I'm sure there were people doing it before you, but you've really not only done it, but you also are interested in helping others to grow their wealth as well, which is a huge, passion of mine. So really appreciate you coming on the show today. Thank you for the contribution, for the stories, and for the way that you are living your life, because you're really doing it. So appreciate you, and look forward to hopefully having you on the show again.
Yeah, thanks, Bronson. Nice to see you as always.
Awesome. Thanks. All right. So what you heard here from Tim is basically you can do things actively to become passive. Short-term rentals is something to consider. Obviously, if you're very, very busy, if you're working 50, 60, 70 hours a week, maybe his particular strategy is not for you, but maybe you can partner with somebody who is doing this. They're actually in the process of building their empire, and by providing equity, providing capital, you can become a part of that as well. So again, the biggest thing I find, even though we do primarily multifamily syndication, long-term and value add type of projects, I find that things that are a little different are really interesting. And the advantages of this strategy are the cash flow is really high, and you can potentially get to where you have enough team members to where you're not actually working in the business. You're more working on the business, and you're much more passive, as you can see that Tim has successfully been able to do. So anyway, if you enjoyed this, I would love to, please like and subscribe, or, reach out to us and let us know. We do also have deals that we're working on. We have multifamily syndication deals where we try to get great returns for our investors. You can go to bronsonequity.com and hit the join button. You can join and learn about our deals. But thanks for joining this episode. We look forward to seeing you on the next one. You've been listening to the Mailbox Money Podcast. For more free resources, articles, and videos, go to bronsonequity.com. There you can download your copy of the special report, The Single Best Investment Strategy During and After a Pandemic. None of the information shared here is an offer to buy a specific investment, and this is for educational purposes only. Consult your financial, legal, and tax professionals and use your own common sense before making any investment decisions. Thanks for joining us, and be sure to tune in next time for more Mailbox Money.